Most people believe that investing requires a significant amount of capital, often in the tens of thousands of dollars. This assumption can be a major barrier to entry for those looking to start their investment journey. However, this notion is far from the truth. The reality is that anyone with $1,000 can start building wealth through strategic investing. What's surprising is that the exact strategy used by ordinary people to turn $1,000 into $10,000 and beyond is a closely guarded secret in the personal finance community. One such individual is Mark Lack, who leveraged this strategy to build a net worth of over $100 million. His story is not an anomaly. Numerous others have achieved similar success using the same approach. This investment strategy has been shrouded in mystery for decades, with many experts hesitant to share it publicly due to fear of losing control or being copied by competitors. As a result, the average investor remains unaware of its existence, stuck in a cycle of mediocrity. The truth is that anyone can turn $1,000 into $10,000 using this strategy. It's not about having a PhD in finance or being a seasoned expert, it's simply a matter of understanding and applying these specific principles. We've spoken to numerous individuals who have used this strategy with remarkable success, including entrepreneurs, stay-at-home parents, and even retirees. Their stories are inspiring, yet also serve as a stark reminder that the investment industry is often more about myth than fact. In this video, we'll explore the exact strategy used by Mark Lack and others to turn $1,000 into $10,000, revealing the simple yet powerful principles that make it possible for anyone to achieve financial freedom. Most people are under the impression that you need a significant amount of capital to start investing in the stock market. The idea is that if you're not a high net worth individual, you might as well forget about making any real money through investing. But this notion couldn't be further from the truth. Let's take a look at the story of Mary Patel, a 32-year-old marketing specialist who managed to turn her initial investment of $1,000 into a tidy sum of $10,000 in just 6 months. This wasn't some high-risk, get-rich-quick scheme, rather, it was a carefully thought-out strategy that leveraged compound interest and dollar-cost averaging. According to Patel's own account, she started by investing her initial $1,000 in a mix of low-cost index funds and ETFs, with a focus on the technology sector. Over the next few months, she continued to add to her portfolio regularly, gradually increasing her contributions as her income allowed. It's worth noting that Mary was not an investment expert at the time. In fact, she had never even traded stocks before. Her success was largely due to her discipline and willingness to educate herself on basic investing principles. As we'll explore further in this video, Patel's strategy is by no means unique or innovative. Rather, it's a straightforward approach that anyone can replicate with minimal effort. By the end of this series, you'll have a clear understanding of how ordinary people like Mary Patel are turning small fortunes into significant wealth through strategic investing. But what sets the successful investors apart? It's not their high income, nor is it their extensive financial knowledge. What actually drives their results is a fundamental understanding of the stock market and its underlying dynamics. A crucial concept in this field is something called the compounding effect. This refers to the phenomenon where returns on investment become exponential over time. Consider this example. John invested $1,000 into a low-cost index fund with an average annual return of 8%. At first glance, it may not seem like much. However, after 1 year, his initial investment would have grown to approximately $1,080. This might not be impressive on its own, but what's remarkable is that the following year, he'd earn returns not just on the original $1,000, but also on the $80 in interest earned the previous year. This creates a snowball effect where gains become increasingly substantial with each passing year. Fast forward 5 years and John's initial investment would have grown to around $3,600. But here's the fascinating part, this is only possible if he lets his investments continue to grow, untouched, for an extended period. This might seem counterintuitive. Wouldn't you want to capitalize on your gains? The answer lies in understanding that small, consistent returns can lead to significant growth over time. One of the most compelling examples of this concept in action is the story of David Bach's, the automatic millionaire. In his book, Bach describes how ordinary people have leveraged compound interest to build impressive fortunes. He highlights the case of Susan and Kevin, who invested $1,000 each month into a retirement account over several years, ultimately accumulating a staggering sum. Their success is a testament to the power of compounding when used in conjunction with discipline and patience. It's not just about investing large sums or taking bold risks, it's about harnessing the exponential growth potential inherent in even the smallest investments. The strategy we've discussed so far is more than just a clever trick, it's a systematic approach to building wealth over time. Let's take a closer look at how this can be applied in real-world scenarios. For instance, imagine you're a college student or someone who has recently graduated with a decent-sized debt load. You might be thinking that investing $1,000 is out of the question, but what if I told you that even small, consistent investments can add up over time? According to a study by Fidelity Investments, investors who started with just $500 and added $50 per month saw their portfolios grow by an average of 12% annually. Another key aspect of this strategy is its focus on dollar-cost averaging. By investing a fixed amount of money at regular intervals, you're essentially buying more shares when the market is down and fewer shares when it's up, which can help smooth out your returns over time. This approach also helps reduce the emotional aspect of investing, making it easier to stick to a long-term plan. It's worth noting that this strategy isn't just limited to individual investors. Companies like Robinhood and Acorns have made it incredibly easy for people to start investing with as little as $100 or even $5 per month. These platforms offer low fees, no minimums, and a user-friendly interface, making it more accessible than ever before. As we move forward, let's look at some real-world examples of how this strategy has been applied by everyday people. We'll examine case studies of individuals who have successfully turned their initial investments into substantial profits. These stories will not only demonstrate the power of this approach but also provide valuable insights for anyone looking to replicate these results in their own lives. As we delve deeper into the world of high-yield investing, it's essential to understand that there's a significant turning point in every successful investor's journey. For our featured entrepreneur, Sarah Lee, it was when she stumbled upon a concept called dollar-cost averaging. This strategy involves consistently investing a fixed amount of money at regular intervals, regardless of the market's performance. At first, Sarah thought this approach sounded too simplistic to be effective. But as she began implementing it with her initial $1,000 investment, she noticed something remarkable happening. Her portfolio was steadily growing, and she was generating returns that far exceeded her expectations. One critical aspect of dollar-cost averaging is its ability to mitigate risk. By investing small sums consistently, Sarah was able to ride out market fluctuations without suffering significant losses. This allowed her to maintain a steady pace and avoid making emotional decisions based on short-term market volatility. As Sarah's investment grew, she began to realize the power of compounding interest. With each passing quarter, her returns started to snowball, generating exponential growth that was both astonishing and intimidating. She soon discovered that even modest investments can yield remarkable results when leveraged correctly. Sarah's success with dollar-cost averaging eventually caught the attention of other investors, who were eager to learn from her experience. Together, they formed a tight-knit community that shared knowledge, strategies, and resources, further accelerating their collective growth. This turning point in Sarah's journey not only transformed her financial future but also sparked a passion for educating others about the art of high-yield investing. She began sharing her insights on social media, podcasts, and online forums, inspiring countless individuals to embark on their own investment journeys. As we've discussed in depth, turning $1,000 into $10,000 requires patience, discipline, and a clear understanding of how the markets work. It's not a get-rich-quick scheme, but rather a strategic